Okay, traders, today is Friday, June 7th, 2013. Welcome to the 1032nd edition of Short-Term Trading Live with Oscar Carboni. This should be exciting, traders. This is exactly what we were talking about over the last 3 or 4 videos, and it is time for me to show you what's going on once again. Traders, for 4 videos in a row, if you recall, I was showing you this chart. And I said, listen, we go into these pullbacks. I've qualified them. The longest one we've seen was 12 days from the start of the pullback till you came out of the hole, was 12 days. Then the next one was 6 days, and then the next one was 9 days. So as the market's going up and we have these pullbacks, I started to count how many days they last. The longest one in the last year was 12 days of pullback and recovery. So I started to keep tally, and I said to everybody, look, this is going to be 12 days soon, and we kept doing the video day after day. 8.5 days on average, or 8.6 days on average, is the event's life, right? So if you have 12, 6, 9, 9, and what was 8 at the time, it averaged to 8.6 days. The average now changes, obviously. I'm just leaving this there because it's the same chart. The average is a little bit longer now. It lasts about 10 days because of the two 12s. Pullback took 12 days of these long ones. So, of course, I added 12, 6, 9, 9, 12. You divide, you get an average. So about 9 days on average, 9 to 10 days is the pullback. So I kept doing this. I kept putting this chart in every video and saying, listen, don't forget we are having a pullback that usually lasts an average of about 8.5 days. So if we get into the 12th day, it would be the longest possible pullback we've seen so far, like this one. Here we are. We got into day 11 yesterday, and what an explosion. Rock and roll. Talk about analysis. Wonderful. Now, traders, we called for shorts all week this week, and we called for the long on Thursday, right after we got out of our shorts at the lows. Go Omni. A round of applause for Omni. What a major call. And I'm going to show you why we made the call, and I kid you not, it's really simple stuff. We'll get to it. You know, futures trading is extremely risky and can cause substantial financial loss. We know that you have to place stops first. We know that futures trading is not suitable for all trading accounts, and if you don't know that, you should. So be careful here and always place stops. Now, traders, we're going to look at what's going to happen in the next few days because we got Sunday through Monday to deal with. Now that we've had our pullback and turnaround bingo on day 12 like it was scripted, we have to look at what else is going on. If you go out to a weekly on the S&P, you'll recognize on the weekly that we did no damage to this market at all. It came right back down to a parallel channel line. It's been sitting here waiting for it for a couple of weeks. This channel was in place for weeks on end, just sitting here. The market pulls right down to the channel and has an explosion. Rock and roll technical analysis. Traders, now I am going to show you the simplicity behind Thursday and Friday's calls. If you remember on Wednesday, Monday, Tuesday, and Wednesday I was doing videos, putting this chart before your eyes. It's the daily emini S&P. Talk about simplicity. I showed you a bear flag and said that there is now a projection down to 1595, 1590. We literally were trading inside the bear flag. We were up here at 1660. I drew this chart for you, and I said, look, now that we're forming a bear flag, we're going to drop to probably 1595, 1590. But once we get there, it's a major, major trend line, and the buyers, or ask any fund manager, as I put on in my video for the last 3 days, ask any fund manager out there if they're going to buy this when it dips. They will, and they have. Now, it dipped right to 1595, 96.5 was the low, and exploded off the line. How come I am saying that this was simple? First of all, traders, I had a bear flag, so we knew that it was going to come off due to the bear flag. Formations are usually pretty strong. All I did was qualify how far down it would go. This is the highest bar in the bear flag, even though I don't have it. But you know what? Just for all intents and purposes, this belongs up here because this is part of the flag, okay? So it's inside the flag. But the flag looks a little prettier to my eyes when I put this down here. But I know that this bar is inside the flag. So when I do my calculation, I simply take the size of the flag. I dropped the size of the flag right here and said, well, there's my calculation. This is where we're going to go. And I gave it to you, and I said, we're going to 95. And guess what, traders? Look at what happened. This is simple stuff. The 95 price was sitting down there due to this trend line, and this is simple technical analysis. It goes right to that spot. That's how I knew. I did a video about this. I did omnis. We got short up here. We got out down here, and we got long this morning right here. Rock and roll omni. It was picture perfect. Now, we're not going to be right every day, and omni certainly can't do this perfectly every day. But omni does have a really good beat on direction, and the simplicity behind my trading makes it easy to stay with the trade. Once again, simplicity. Conservative, aggressive. Conservative, aggressive. Either of the two were met. So, then I looked at it and said, well, now that we've met the projection off the bear flag and we hit 1595 or 96.5, do we have a parallel channel? Yes, we do. Are we going to take it out today? Very, very likelihood is yes, because there's two ways to draw the channel. You can draw it like that, or pull it in and draw it like this. Either way, you can look at this as a channel. You can do it here. You can do it here. It fits either way. You can look at this as a channel and say we're out of it, and I think that's exactly what happened here. So, traders, yes, it looks simple, but this is very, very high-level analysis. The simpler you become, the better you will become with calling market direction, I assure you. If you keep it simple, you will understand a lot more than the very complicated, overanalyzed charts that I see from time to time. So that's on the daily. Let's go look at the weekly. Traders, the emini S&P on a weekly bar, I have not touched this chart in months on end. This trend line has been just sitting here, and look what happened as of this week. Look at what happened right here. This is amazing. It came right to that line as if it was scripted. You know, you've all seen this chart, right? I've been using this chart for months on end. As if it was scripted. It hit this line, trend line analysis, and rallied out of the hole. So the S&P looks great right here. Let's go look at another chart. Transportation average weekly bar chart. We got our little traveler's umbrella here, traders. I thought maybe we were getting a little top heavy, so I was starting to pull out some of my topping tools. Nothing happened there. We get rid of it. We came down, hit the bottom of this trend line, rallied up, almost hit the top of the trend line, came down, went through the bottom, and came right back into it on a weekly chart. The whole time we maintained staying inside of this major parallel channel. The entire time we've never left this channel. So the market is extremely bullish. It has bounced off of a really good support area and is now as bullish as it was 2 weeks ago. So I am loving what I'm seeing here. Let's go look at NASDAQ. Traders, the infamous head test in the NASDAQ. Just perfect. Not many people know about this. Not many people know how to use it, but you know it's an Oscarism. You know that we have used this many times. On the upright, head and shoulders, I always contend that there will be a head test. So the market runs up, does the head test, and gets above it with no trouble at all. Breaks through the head test, and that means we know that this is not a head and shoulders. That's a topping head and shoulders. It is a continuation pattern, which happens a lot in these markets as they become bullish. So it's a continuation pattern. It rallies up. It gets above the head test, and look what it does. It comes back, hits the line, hits the line, hits the line, breaks it, comes right back up and gets above the line again. That is a very resilient market, traders. This is bullish. This is resilient. This market does not want to go away. This is a weekly, by the way, not a daily. This is a 1 week bar this week. So when you look at the markets in this light, boy, oh boy, we got something good going on here. Traders, the Dow Jones Transportation Average. You have seen this chart in many in a lot of conversations here at the website, in the chat room like we are now, and you've seen this in my videos. Look at this chart. You start with a bull flag, you go to an F flag, you go to a bear flag, which then you need a calculation. So we take our calculation on the bear flag. We have two, right? We have the aggressive and we have the conservative. So we do the conservative, we do the aggressive. The aggressive worked perfectly. and we came right back out into the channel, and away we go. Now, traders, I will admit, I was getting worried that we were starting to top out here, because you put this rounding topping tool on there, and you've got 3 flags, a head and shoulders, and a topping tool. We had this going on, the 12-day cycle. We had this going on. So I was steadfast, and I was worried about this all along, knowing that, you know, if this is right, we should bounce. And you guys have heard me say all week long, I'm extremely worried about being short. I want to be very nimble because I think that the pullback will not last long. As you can see, bingo on the 12-dayer. So I'm looking at the transports. I see it get back up here. I start looking at my indicator base. It becomes bullish. Topping tool goes away. Small head and shoulders can be a continuation pattern like the one here. Shoulder, head, shoulder. Came off but then continued. Shoulder, head, shoulder. Came off and now is continuing. The leader looks really, really good here on the daily. Traders, look at this bad boy. We had Otapma, but you know what? It didn't quite make it to Otapma, so we'll just remove that. It did sure get down there, but it didn't quite hit Otapma. We're going to remove it because we are back in the trend line. We're back in the channel. Boom. So now that we're back in the channel, we got a long way to go to make up for some lost ground. Where does it need to go? It needs to go up here to the top of this channel. So we have a long way to go in the Dow Jones Industrial Average, the tranny, the NASDAQ, the S&P. These markets look fantastic. Now, what's on the other side of these markets? Let me show you. Traders, do you remember this week everyone kept asking me what I thought of gold? Do any of you remember the technical opinion I belted out every time I was asked that same question? Does anyone know or remember what I was telling you in the room? What did I say to the answer of where is gold going? Does anybody remember? Well, not the price of 900. Yes, that's a long-term projection. But this week I told everyone we are in a bear flag and this is going to go down. It's in a world of its own. It doesn't matter where the stock market goes. Sell the rallies in gold. You heard me say that all week. Here's what has happened. It rallied up, came off for the close. Rallied up, came off for the close. Rallied up, stayed up high yesterday, and broke just like it's supposed to. It's a bear flag. Now, should there be a bear flag in gold when the S&P is so bullish? Absolutely, unequivocally, yes. Why? Because the reason why gold had its major move on the upside, and we'll switch to a weekly, the reason why gold had this move was because the world was falling apart. The world got better, and gold recognized it, and gold is now starting to do. It's falling apart while the world's economies get better. There is no way gold can sustain these high prices. They went up when the stock market went down. The stock market is now going up. The gold fear factor will go down. Now, what other market has been exactly like gold since 2008? Does anybody know? 2 markets that will compare and butt right up to one another. Meaning this, when the stock market got nervous looking, 2 markets started to get bought like crazy. Every single fund manager, every country that had money that they needed to put to work, they put to work in 2 markets. Gold and bonds. Here's where bonds are now. Does this look familiar? Oh, interesting. Another bear flag. How come? Because the same thing is happening in this market that's happening in gold. The fear is leaving, right? The street is not afraid as they used to be. Absolutely unequivocally, the U.S. economy is healing. You can see that in this morning's employment report. You can see it every time we have a report about real estate. It is doing better in the United States. And the 2 markets that benefited from the United States having turmoil were gold and bonds. The same 2 markets are in bear flags, are in bear markets, and are absolutely going to head lower. Bonds, by the way, do you notice what else is on this chart in a monstrous form? Monstrous form. Look at this. This guy is done. The bonds are done. A bear flag in the right shoulder? Goodbye, bonds. That's the way this works. Technically, this market is over. That brings us back to a pretty market, this one. Remember the 12-day cycle? We are out of it now. Count the dots. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Bingo! It worked just like it was supposed to. In today's new world economy, market dips are mere buying opportunities. Traders, thank you so much for coming to today's class. I hope today's class will keep you in tune with where these markets are going. Sunday night through Monday, I will absolutely be here in my chat room to help guide you through these rough and tumble markets. Thank you once again. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.